Is Mustang Bio a hidden gem? If you don't know who they are, they're a biotech company, and looking in Tykr, their share price went from 96 cents up to $3.34 in just a matter of days. We're going to find out what may have caused that. We'll also take a look at some of the latest news as well as the ratings in Tykr, and then I'll let you know if this is a stock I plan to buy or sell. Before we dive in, if you don't know who I am, my name is Sean Tepper and I'm the founder and CEO of Tykr. If you're new to investing or want to get better at investing, rest assured you're in the right place. Here at Tykr, we help people buy and sell stocks with confidence. So let's talk about the latest news. So at the top of the list, they have a drug they're working on called MB-101. This is in a state called orphan drug designation. What that means is it passed a significant regulatory milestone. And on top of it, it looks like this is potential, not guaranteed, but potential 7 years of market exclusivity. That's a big deal. I know with biotech and pharma, if you can get a few months or years of exclusivity, that can really put you ahead of the competition. So that may be the reason why this stock is starting to take off like a rocket. Let's keep going here on other news. They're working on the phase 1 trials right now for this same drug, this MB-101. And it looks like this is the latest news that therapy demonstrations have stated 50% of patients achieve stable disease or better. So sounds like some really positive indicators there. They're also going to be combining this MB-101 with MB-108. What does 108 do? Looks like it helps break down cancer cells or tumors. So I think the two together could really make a big difference. So this company really doing some incredible stuff to help a lot of people. All right, now let's get to another point here that jumped out at me in the news. They announced that they're looking for more help with funding. Now, between you and I, when one of the stocks I'm investing in the public market, not private, in the public market, I typically don't want to hear them saying, hey, we're looking to raise capital. Typically, when you're a public company, your revenues should be funding your business. And if you need money, you have enough clout, you have enough collateral, you can simply go to a bank and just simply get a loan. So when I hear that from a public company, it doesn't really increase my confidence a whole lot. Again, just my 2 cents. All right, let's keep going here. This is another point that was kind of like the funding situation kind of perked my ears up a little bit. All right, they did get a notification from the NASDAQ market that they're allowed to, or they regained compliance with the NASDAQ. So they were out of compliance? What happened here? Well, let's get into that. There are minimum shareholder equity dollar values you need to achieve in order to even be qualified as a public company. Let's get into those right now. So shareholder equity, I'll just touch on that. That is total equity minus total liability. So think about all the things in your business that have value, whether it's real estate or equipment, software, whatever it is, everything that's of value minus the liabilities. Biggest liability in a business would be payroll. All right, here are the different tiers or designations in the minimum dollar amounts. I thought this was really interesting, but really good context to know that Mustang Bio, they did fall out of compliance. Now they're bumping back in. So at the bottom, you have NASDAQ capital market requirement is $5 million in shareholder equity. I'll tell you right now, $5 million value of a public company, that's not a lot. There are small businesses literally all around us that have more valuable businesses than that. So that's pretty low, but I'm glad there is a bar. Otherwise, we'd literally get people coming up with an idea and going public the next day and raising money. That would not be responsible for those businesses or for the investors trying to invest in those types of businesses. But anyway, let's keep going. So that's the capital market. Then there's the NASDAQ global market requirement, which is 30 million, not 5, but 30 million. Then you have the NASDAQ global select category, which is 55 million. And then I was just curious here, what is the minimum standard for the New York Stock Exchange? That is 60 million, significantly higher. So good to know regarding out of compliance. Now we're back into compliance with Mustang Bio. All right, now let's transition into Tykr and take a look at the stock. We're going to walk through the 7 to really understand if this is a stock to buy or sell. Of course, don't buy or sell stocks based solely on what you hear, only only buy and sell stocks that align with your own personal financial goals. Jumping into the stock, we can see right at the top a penny stock warning. Those of you that are already members of Tykr, you know where I'm going with this, but we have indicators or warnings in Tykr to just give people a heads up on penny stocks. Now, here are the details. Any stock between $0 and $5 US dollars is considered a penny stock. And we try to do the currency conversions around the world, an appropriate conversion at least, just so people don't get attached to or get into these stocks that are like 10 cents and think it's going to $2 in a week. It typically doesn't work that way. So here are the details there. Any stock between $0 and $5 is a penny stock, and there's a 99% chance that stock will never break out past $5. The reason is large financial institutions, institutional investors, not retail investors like you and I, but institutional, they lose confidence and interest in, and they won't touch those stocks with a 10-foot pole. All right, then you have what I call flirting with penny stock territory, which is any stock between $5 and $10, again, US dollars. There's a 90% chance, not 99, but 90% chance they will never break out past $10. It's very hard to do. So we always tell people at Tykr, you want to make sure you let institutions put their money in first before you put your money in. Let them put their money in first, drive that share price above 10, and then take a look at Tykr to see if the financials really align. Otherwise, sit on the sidelines and just wait. So we can see here, we get a penny stock right off the bat. Now let's get into the 7. So the first thing we look at is that summary, which is always to the right of the stock. Stocks are either on sale, watch or overpriced, green, gray, red. Only about 15% of stocks actually make it to on sale. This being overpriced, I'm not surprised, but let's keep going here. So next up, we've got the score. The overall score here, we like to see 50 or higher. This is at 26, shows the overall financial strength of a stock, which is pretty weak in this case. Let's keep going. Next up, we've got the margin of safety. We want to see 50% or higher. We actually see 11% here. Okay. We'll take a closer look at the financial statement to see what's going on. All right, then in the middle, we have the 4M confidence booster. It looks like nobody's done a 4M on this stock quite yet, even though it happens to be a top search stock on the internet as we speak. Well, let's, just for fun, let's do a 4M, show you guys this could take like a minute or two. So you get the math part, get the meaning, how does it make money, the moat, how does it compare to other businesses, and then the management, that's the track record of the CEO. All right, we're going for 8,200. We should have high confidence. Anything between 60 and 79 is moderate confidence. And then anything that's 59 or lower is run for the hills, you could say. All right, let's keep going. So it lets you know what the math ratings are. You got that summary score, margin of safety. Let's get into the business here. So we are connected to OpenAI. Let's see what OpenAI does here. It's going to summarize how does the business make money. Revenue from clinical trials, funding from government grants. I don't know if I would look at that as a long-term safe play. I like legit revenue. Partnership agreements with biotech firms. Yeah, that makes sense. I like that play. But anyway, gives us an overview how they make money. But the scalability is only 5.5 out of 10. Let's keep going. All right, we do look at the alpha. In this case, this stock has underperformed against the S&P 500 over the last 5 years. And next up, we've got the meaning. As Warren Buffett states, we should only invest in businesses we know. In my case, I'm not the expert at pharma or biotech. I'm going to go very low in this case. All right, let's see how this compares to other businesses. All right, looks like the summary. Look at this, a lot of biotech, a lot of overpriced stocks in that space. It's very hard because you have to go through all the rules and regulations, FDA being one of them, to really get approved to even make money. It's anybody who's creating a biotech or pharma company, I give you credit. It's a long time till you start making a profit. All right, let's keep going. Score, first place. Look at that. It shows you it's hard to get good financials in this space. All right, a 23 versus a 21, another 21. Margin of safety, their first place. Wow, okay. Revenue scalability, first place. Look at that. And then, yeah, Alpha, look at that. They are the best of the bunch, surprisingly. We're almost done here. Management, the last M. Let's get a little summary of their impact. All right, 5 out of 10 in this case. Let's keep going. Last screen here. You can skip this screen. This is Glassdoor. Really interesting here. Simpler has an article out, but there's articles all over the internet talking about this. But companies with a higher Glassdoor rating actually do get better returns in the market. Long story short, if you treat your people with respect, you actually get better results. All right, Glassdoor. Let's see what we get with Mustang. We got a 3.3 out of 5, and then I don't see a CEO rating. I see this 58% would recommend. Yeah, so you go back here, we'll put the 3.3, and then CEO approval. We can't find it. Let's just go 70%. That's like the minimum threshold for like good in Glassdoor. All right, we'll go to continue and see what we get. 54. Definitely below that 59, but let's keep going through the 7. All right, we get down to the bottom. 5-year returns, we like to see 80% or higher. The reason is the S&P 500 over 5 years typically returns about 80%. We like to invest in stocks that consistently beat the market year over year, not just 1 year, but 5 years ideally. So you can see here, negative 99%. All right, let's go to the financials tab, take a look at that EPS. Aha, okay, so there is a margin of safety of 11%. That's because of this. It's not a profitable company, but you can see the net income, it's significantly better than what it was. Look at this. This all relates. Like net income and EPS are very similar. The difference is EPS, earnings per share, is net income divided by outstanding shares. So net income, negative 8 million, then an improvement to negative 1.4 million, then negative 952K. So as you can see, not profitable, but moving in the right direction. That is actually a good sign. All right, let's go to that earnings calendar. Oof, yikes. They missed by 590% there. Ouch. You don't want to see that. So I did see they beat, but then they had another miss. Yeah, pretty inconsistent. If I am doing my math correctly, the 7 were 0. Oh boy. Yeah, so there you go. And again, one reason why I did this stock, well, multiple reasons, the penny stock warning, and it's also being searched for like crazy in search engines. We use a little help from AI. We also have a tool in Tykr, top search stocks. And then another tool we use is called Writer Zen. There's other SEO tools out there, but what are people searching for? And this stock popped up. Surprisingly, a lot of people are looking for this. But yeah, just because you got a whole bunch of people looking in the same direction at a potential, what they think is a great buying opportunity, don't follow the herd. You know, cut through the clutter, log in a Tykr, find out the real truth, because I tell you what, they get a bad earnings report. We can take a closer look at the share price here. Yeah, that's great. It's taken off, but it could go from 334, let's say you bought it there, and it goes back down to 96 cents. That's a realistic situation. This happens a lot with a lot of meme stocks. So moving on to the last point here, what am I doing? Well, I do not plan on buying this stock. I won't even add it to my watch list. So there you go. I hope this video was helpful. If you want to buy and sell stocks on your own with confidence, or even see my portfolio, you can join Tykr for free. Of course, don't buy and sell stocks based solely on what you hear. Only buy and sell stocks that align with your own personal financial goals. All right, thanks for checking out this video. We'll see you in the next one. Bye for now.